The crypto market is flashing warning signs right now, and if you're not paying attention, the next few weeks could catch you completely off guard. Bitcoin is wobbling under key resistance. PayPal stock just imploded almost 20% in a single session, and Chainlink is clinging to a critical support zone that dates all the way back to 2024. In this video, we're breaking down what's really happening, who might get hurt, and where the next big opportunity could be hiding. Bitcoin is currently trading in the upper 70,000s after a sharp bout of volatility that briefly dragged price down towards 74,500 in early February 2026. At the same time, it's still struggling to reclaim that major 82,000 to 85,000 zone that bulls have been fighting over for weeks. As long as BTC stays below that band, downside risk remains firmly on the table. Macro pressure is everywhere. Geopolitical tensions, fears of a potential U.S. government shutdown, and stubbornly high interest rates have all been weighing on risk assets. On top of that, slow and uncertain U.S. crypto regulation, including debates around things like the Clarity Act, is making big money more cautious about piling in aggressively right now. Technically, analysts are watching several key levels. Immediate support sits around 74,000. But if that gives way, price could slide toward the 68,000 region. Some veteran traders are even eyeing a deeper correction into the 58,000 to 62,000 zone, pointing to a rising wedge pattern that has been forming for months, a classic bearish structure that often precedes sharper pullbacks. On the flip side, if buyers manage to push BTC back above 82,000 to 85,000 and hold it, that could open the door to 89,000 to 90,000. with a shot at 93,000 if macro conditions ease. So, for Bitcoin right now, the game is simple. Below 82K, you respect the downside. Above 85K, the bulls take back control. While Bitcoin fights for direction, PayPal just delivered one of the nastiest reality checks on Wall Street. The stock crashed nearly 20% in a single day after the company posted weak financial results and announced a major leadership shakeup. Revenue in Q4 climbed only about 4% to $8.7 billion, and operating income grew roughly 5% to $1.5 billion, numbers that fell short of what investors wanted to see in a competitive fintech landscape. Guidance didn't help either. PayPal expects earnings per share to drop by mid-single digits in the first quarter and to do roughly the same over the full year, signaling slowing growth at a time when rivals are getting stronger. The board responded by ousting CEO Alex Chriss and bringing in Enrique Lores from HP, with the current CFO and COO Jamie Miller stepping in as interim CEO. The board's own statement said the pace of change and execution simply wasn't in line with expectations. Under the surface, PayPal is getting squeezed from every direction. Buy now, pay later players like Klarna and Affirm, big tech giants like Apple and Google, and even stablecoins such as USDT, USDC, and RLUSD, which many users prefer for fast, low-friction transactions. PayPal's answer was launching its own PYUSD stablecoin, which has grown to over $3.6 billion in supply. But the big question is how effectively the company can actually monetize it. From a valuation perspective, PayPal has been crushed, down from a $300 all-time high to around $42, with a market cap that shrank from over $386 billion to about $40 billion, and a forward PE under 10, far below the S&P 500 average. Technically, the chart looks ugly. The stock is below all major moving averages and has formed bearish patterns like an inverted cup and handle and a head and shoulders, with momentum indicators still pointing lower. For crypto investors, this is a reminder that even blue-chip fintech isn't immune to disruption from stablecoins and decentralization. Now let's talk about Chainlink, because it's sitting on a level that could decide whether Link's next big move is a bounce or a breakdown. Analysts are watching the $10.1 support area closely, noting that if it fails, Link could revisit its August 2024 low around $8. That level has acted as a strong floor since mid-2024, making the current retest especially important. Recent forecasts show that Chainlink has been trading well below its key moving averages, with strong selling pressure across short, medium, and long-term timeframes. Momentum indicators like MACD and ADX lean bearish, while oversold readings on RSI and other oscillators suggest sellers are still in control, even as the market stretches to the downside. In the near term, projections point to Link ranging roughly between $9 and $10.2, with a low probability of a sustained rally unless it can break back above dynamic resistance near 11.7. Other analysts have highlighted that if broader weakness persists, a drop below $9 is very much on the table, while any recovery would need strong volume and a reclaim of the 50-day and 100-day moving averages to flip sentiment. Put simply, Chainlink is in a prove-it zone. Hold these supports, and it can build a base for the next cycle. Lose them, and August 2024 prices come back into view. So what does all of this mean if you're watching Bitcoin, PayPal, and Chainlink from the sidelines or holding bags right now? Bitcoin's battle around the 74K to 85K band is likely to set the tone for the entire crypto market in early February. Lose key supports, and we could see a sharper flush, reclaim resistance, and we may get another leg up toward 90K. PayPal's meltdown shows how quickly traditional fintech can be punished when growth slows and competition, including from stablecoins, heats up. And Chainlink is your textbook example of why support zones matter. A breakdown toward $8 would hurt in the short term, but could also create one of those high-conviction accumulation zones long-term investors look for. As always, this is not financial advice. Use these levels as a framework. Do your own research, manage your risk, and don't trade purely on emotion. If you found this breakdown helpful, hit like, subscribe to BlockNexus TV, and drop a comment with the coin you want us to analyze next.